All right. Hi, everyone. This is Joe Hedges with Beyond the Chart, and this is the market update for the weekend here, Saturday. Uh, let's see, not October, Saturday, January 4th, 2014. Okay. We're looking at the Dow Jones Industrial Average, and this is actually the weekly chart I've got up. Let me go to the daily really quick. The Dow was up 28 points on Friday, and actually is kind of a little very small consolidation type of bar. And when we look at, we're not really seeing the divergences. I think we talked about this Thursday night. But we're up here above the Keltner channel. Now we've pulled back in. We haven't gotten to the 10-day exponential yet. Let's take a look back at that weekly. The weekly, a very tight range for a weekly chart, and we are seeing some divergence here on the RSI and on the DI plus on the weekly chart. So little bit concerned about that. It's over this last about 6 bars that we've got last 6 weeks. But we've seen that type of thing before, but it has resulted in a little bit of a pullback over the next few weeks. So we'll just have to keep an eye out here as we're going forward. I mean, it's just a little bit of an alert. Let's talk about the S&P 500. Pull back to the 10-day exponential. And we'll talk about the short-term trading index in a minute. We may be at a point where it's really hard to tell. Have we just had a couple of day pullback and we're getting ready to go again, or is this just the beginning of a couple of weeks? That's what's really hard to tell based on some of the readings that we're getting. So not getting any strong divergence like we've talked about. Let's see, we want to go to the NASDAQ. And I must be missing it. There it is. NASDAQ is pulled back in. The NASDAQ is pulled back inside the this channel up here and this price channel, and we've gotten back down here to the 10-day exponential moving average again. We could still pull back a little bit further, but I mean, this is one where we're getting a little bit of divergence here on a couple of week basis. A little bit here too, but it could be really nothing more than telling us that we're getting the pullback that we are getting. So that's a little bit hard to see. Let's NASDAQ. Let's take a look at the New York Stock Exchange. Well, actually, I'm gonna go to the New York, and then I'm gonna come back to the short-term trading index because I've got some things marked on here. Let's ignore these numbers for the minute. Short-term trading index has basically done the same thing, very similar to the Dow. But again, no strong divergence, but we've pulled back to the 10-day exponential moving average. Let's see, we did that back in like here. Here we did it and then broke down through. Let's see if we look back early in the year. I mean, it varies, it really does. There's no rhyme or reason as to just, if you pull back, it may or may get some buying coming in, or it may break on down through. It's really hard to tell at this point. Okay, now what I want to do is look at the short-term trading index. Now we talked about how we got really, really low over here, and this is kind of a precursor to a market top. But like it's been a week or so in advance, or week to 2 weeks. Well, the other one thing I noticed is the reading we got on Friday at 1.5. Okay, so we're now starting to get up into that bearish reading, which has a tendency to get close to where declines will end. Okay, so 1.5, 1.63, 1.65, 1.77. 1.94. Okay, so now what I did was I went back to the New York Composite, and I put these in to see, okay, where are these happening? Okay, so when readings above 150, 1.5, right in here towards the end of this move, okay, and here in this pullback, here in this short little pullback, okay, and then this was a series in here where this kind of started the move. Then you got one in the middle, and then you got one towards the end of the move. Here is kind of the end of a downswing, And then you had another one kind of strong, and that was on August 27th, which was very close to the end of the move. But the last 4 readings, or 3 to 4 readings, we were higher 4 to 5 days after those readings. Okay, that's the thing I was noticing. We were higher after those readings. So if the pattern of the last 3 to 4 readings holds, then the expectation would be that we'd be higher 3 to 4 readings, 3 to 4 days after these readings. So we'll just have to see. Short-term trading, the high-low net is not really showing us anything more. A little bit of a hook again, which may mean that we've got a down day coming on Monday. And let's see, the other one I wanted to look at, okay, the VIX. I don't think the VIX is showing us anything new. It pulled back on Friday. So, again, it's kind of staying down here low. It's not kind of expected, it's just not really giving us any new signal anyway. All right, want to look at the semiconductor ETF. It's pulled back last couple of days. It's trending upward nicely on a weekly basis. It's just showing a nice upward trend. I think there's a little bit of divergence coming in. Definitely looking at it there. Now the home builders, again, it had pushed above the point real nice, and then it's kind of consolidating right in here, a little bit of congestion. Very tight trading range for this last week, okay? Very tight trading range. Now, one thing, I want to look at the XLF real quick, the financial ETF. And if I got this, yes. Okay, we are getting divergence on the financial ETF, okay? We're getting some divergence in here. And one of the things I wanted to point out is, let's see how much time we got. I have to do this real quick. When you go back to back here, take a look at this. You think, okay, what year is this? Is this 07, 08? No, this is 2011. Now look how this trended down. And this is March, okay? This is February, March. Now let's take a look at the Dow Jones Industrial Average in that same time period. Let's go back to 2011, okay? And now here is February, March, higher into April, into early May, sold off, rallied. But, okay, look at the difference between those two. Look at the difference. Look how this basically started to get into a bearish mode well before the market did, and then sold off and set the stage. That's why you look at the XLF. That's why you monitor this to see what is it telling. When is the XLF starting to roll over? Are we starting to we're getting some divergence, but it hasn't rolled over yet, okay? But this is what we have to keep an eye on, because it can kind of give us a little bit of a heads up. Okay, the last thing I want to talk about today is Apple. My weekly view on Apple, and it's starting to do exactly what I thought it was going to do, and that is, you've come up, you've had this move up into here, this bear market, and now this thing is coming over. I expect it to go down to this level, okay? Because what this is this is a, let's get rid of this. This is a rising wedge in a bear move. Why is it a bear move? Because you've had a heck of a rally here, big rally. We've started the move now. We've got this rising wedge, and this thing, is going to basically, come on down. That's my expectation, and at least, down to the bottom of the rising wedge. So anyway, that's what we're looking at. And I think that let me get rid of this, blow this back up. It needs to break this dotted line support. I mentioned this once before, okay? It needs to break it, but it's starting to break this upward trend line already, so that's very, very negative. Okay, that's it for today. Thanks for stopping by. We'll have another update out here on the key trade ideas for the week and what happened last week. Talk to you soon. This is Joe Henches for Beyond the Chart. Thanks for stopping by.